about 105 people on this webinar right now. We had about 170 plus reservations. So good afternoon, everybody. My name is Matt Mayhood. I'm president and CEO of the Silicon Valley organization. And it's great to be with you this morning, or actually it's this afternoon. That was this morning's webinar. It's great for you to have you all with us. In just a bit, we're going to have SVO member Petrinovich Pugh Co, also known as PP&Co, will break down the PPP loan forgiveness application process. That's a lot of P's. Just a quick update on what's going on with the SVO, the Silicon Valley organization. We are the region's oldest and largest chamber of commerce. We are here to serve you and our members and our community. We're busy actively working as hard as we can. We've moved all of our programming to a virtual format, doing webinars such as these on PPP. Our Silicon Valley Forum division has done 2 webinars in the last 2 days on ag tech and startups in that space. And we continue to provide our monthly membership. Breakfast is now virtual, so you should check that out. And our COVID-19 page is always a great resource to go check out if you need current up-to-date information around shelter in place and how you can reopen your business. Thanks to the SVO team for keeping that up to date, both Monique and Mandy on our team doing a great job there. Tomorrow, or actually I think it's today, is out. Mayor Liccardo's Silicon Valley Recovery Task Force report is out. A pretty extensive document, about 77 pages of information about how to grow and get our economy back to work and make Silicon Valley work for everyone moving forward. But I will tell you, the SVO is laser focused on how we can get our economy open now. And that's really focused on small and medium-sized businesses. Those businesses that I think often are left behind in the current shelter in place and open, the ability to open and operate in a normal fashion. We actually think that if you can go to the grocery store and Target and go grocery shopping, many of these small and medium-sized businesses should be able to operate just as well. So we're working on that, and we're keeping our ear to the ground to provide you the latest and greatest information, resources, and tools that you need to open your business safely to protect your employees and your customers. So go to our website at thesvo.com to check that out, and hopefully you learn more. And if you have any questions, just let our team know. Before we get started, I do want to thank the SVO community builders. These are our largest members, our largest investor members who invest in our organization at a high level. We really appreciate their ongoing support and engagement. We have about 1,200 member investors, but these folks are engaging at the highest levels to ensure that we continue to be a catalyst for business growth, a convener of leaders and influencers, and a champion for a stronger community. And we are driven by a fundamental belief that when business succeeds, our communities thrive. We could not do this without the support of these members. If you are not a member of the SVO, there is no time like the present. Just hit me up in the chat box, reach out to Monique. She is on the line here today. Reach out to her, and we'll get you some information on how you can become an SVO member at any level, a basic, a premier, or a community builder. So let's take care of a few housekeeping items to get started. This meeting is being recorded and will be posted on the SVO website, usually by the end of the day. To ensure a productive dialogue, all participants have been muted as you've entered. And the last 15 minutes of this webinar is reserved for Q&A. So write any questions that you might have in the chat box. And we did give Tom all the information, all the questions that you submitted in advance, and I'm pretty sure he'll make sure to cover all of those in his presentation. Okay, so that's all the housekeeping items. Let's get to today's seminar. So we've been on this paycheck protection program and COVID-related tax journey with PP&Co since shelter in place started. In April, they broke down the CARES Act and provided tax updates on how you could utilize the CARES Act. In June, they walked us through what and how can you and can't use your PPP funds for. And of course, we couldn't leave you hanging. So now we want to go over probably the most important part is the forgiveness application part. So with us today is Tom, back from PP&Co, Tom Wagstaff. Thanks for being here with us again, Tom. How you doing?
Good, Matt. Surviving.
Surviving and thriving.
Well, yes, accountants are thriving a little, yes.
All right. Well, we've been through a lot in the last 4 months. It's only appropriate that you can tell us what we can expect as we prepare to apply for PPP forgiveness. So, Tom, the floor is yours.
Thank you, Matt. And hello, everyone, again. Probably not your favorite speaker. We've done this I thought it was 4, but we've done 3. This will be the 3rd one of these as we progress through the PPP program. And now we're at the forgiveness stage. The last presentation I gave was a day or so after they had just changed everything with what they called the Flexibility Act. And we covered that in a speed form, and I tried to improvise a little bit because, as I said, the slides were pre-Flexibility Act. So in this presentation, I will still go through some of the Flexibility Act changes. So they're really profound and are generally targeted towards easing the forgiveness process and getting your loans forgiven. It seems like the overall thrust of the effort from the government up to now is to get the money out fast and to find ways for you to expedite a forgiveness. And I should, as I always have in this process, it's an ever-evolving situation. It's a little frustrating because the laws change almost daily. We did this PowerPoint with some updates up to the end of last week, and then 2 days ago they had a couple new changes. So they're literally changing this whole process on the run, which is very unfair, frankly, but most of the changes are favorable. And that's why some people are delaying this whole process, because they keep hoping for more favorable developments in the process. I was speaking to a client last week, and he was asking for these updates, and I was giving him hedge answers because, in point of fact, some of these questions haven't been completely resolved. He finally said, just give me the answer. And I said, well, do you want the answer? And he said, I want the truth. And I said, you can't handle the truth. And anyway, it's an ongoing, ever-developing situation. And I don't have a slide for it, but I noticed a lot of the questions are about what's coming up. What's the future of the program? Will there be an additional new PPP segment? And if I'd given this presentation at the beginning of the month, I would have said likely yes, and probably giving you real specifics. There was something called the HEALS Act that was percolating through Congress. It was sponsored by Susan Collins and Marco Rubio, and it was an additional PPP loan with some differences. It was available for people who could show that they had a 50% reduction in their gross revenue. It was for companies with employees less than 300, and it was essentially to create a cumulative loan of max of 10 million to get, if you already had an original PPP loan. It would also cover more expenses than just the payroll costs. It would cover things like costs incurred to make your workplace safe and cost of cloud accounting type things that you're spending as you're working more remotely. So what's the status of that? A lot of people, one of the most important part of it perhaps was the ease of filing the forgiveness. They were going to say any loan under $150,000, forgiven, done, no application process at all. A loan between $150,000 and $2 million, a greatly modified and simplified process, I think close to just almost automatic forgiveness. It's dangerous to present all this because it hasn't happened. And what happened in the end of, at the beginning of August, before Congress left for their break, was that they had a bunch of issues in other areas regarding the stimulus package, and in the end, nothing happened. It would seem like this was a Republican proposal that would seem to be popular across the board. I do have to give this presentation assuming this doesn't happen, but keep in mind that that's looming out there, even more reduction in some of the paperwork required. And I noticed some of the large banks like Chase have not opened their portal yet for submitting the forgiveness. And I think it's no doubt due to the fact that they're waiting to see if there's going to be modified and simpler forms of the forgiveness. So at the end of this presentation, I'm going to address the implications and whether you can file the application early. And we'll kind of weave all this into that presentation. So we'll start with the Flexibility Act. Then we'll go to the frequently asked questions. And when I say that, that's the frequently asked questions that were presented to this SBA that they ultimately produce on August 4th, in this case, new guidelines. Guidelines that answer a lot of our questions, but sometimes, as they always do, when they give a guideline, they sometimes create questions as they're answering them, or give a new definition of something you thought you already knew. It's very frustrating. We'll go through the forgiveness application form. This isn't going to be a seminar where we're filling out the form for two reasons. It's changing all the time. It's laborious, and as anybody in our office will tell you, I will screw it up. So then we're going to go through a quick PPP review and the should I apply early and a couple of recommendations. So let's get going. The Paycheck Protection Flexibility Act was the one that passed just before our last presentation. We covered it in a speed fashion, but remember that the March 27th CARES Act had a $2.3 trillion relief package. The headline was the creation of the PPP loan under Section 7A. It ultimately is designed to put $600 billion in the hands of small businesses. 600 because there was $300,000 billion tranches to it. By the way, I think I had the numbers in terms of how many loans. There were 5.2 million PPP loans issued, which is extraordinary. I think I gave you the summary that there were 30 million small businesses, which triggered the whole issue of how was the SBA going to process all of this. But that's an amazing number. The PP loan is a loan in name only. Once the borrower receives the funds, the amount spent during the next was 8, now 24-week period on payroll, mortgage interest, rents, and utilities is eligible for forgiveness. That's the whole point. It's a loan that's not a loan if you use it properly. Okay, so new development, new form. This is the movement towards an ease in applying for the forgiveness. There's the forgiveness form altogether is called a Form 3508. We had that before our last presentation. There are 3 pages of that form that have a lot of data added to it. The third page in particular is forcing people to pull their hair out. It was really complex and had you do a lot of computations. There are some software that's been helping people do it. And frankly, we can help you do some of it as well. But for many taxpayers, I'm going to go through this new 3508EZ is your ticket. It's a 1-page form. It's pretty easy. It should only take an hour or so. It's for sole proprietors, independent contractors, and other self-employed individuals who have no employees. It's also for employers who did not reduce the salary or wages of their employees by more than 25%. And did not reduce the number of hours of their employees. It's a twofer there. That's the whole point of that complicated last third page of the application form is computing the reduction in your forgiveness if you lost employees or paid employees less. So if you didn't fall into that category, you're not going to have to go through the laborious, lengthier form, and you're going to be able to use this 3508EZ. By the way, I'm going to mention this numerous times because I gave you the criteria, which is the fact that the salaries were not reduced by more than 25% and did not reduce the number of hours of their employees. Safe harbor, keyword, safe harbor, keep this in mind. If you're able to fulfill one of the safe harbors in terms of explaining why you didn't retain your full-time equivalents, I call them full-time employees, you will still qualify for the small form and you will also not have to reduce your loan by the reduction in your full-time employees. These safe harbors are critical. And I think you're going to understand it more as we go through it. So that's the 3508EZ, easy form to do. Just going through, now these are the frequently asked questions that are relatively recent. They address the Flexibility Act, and they also address things that came up that weren't answered by the Flexibility Act. And these are these SBA frequently asked questions. And the first one was our payroll costs that were incurred during the covered period or the alternative payroll covered period. Remember, you can use a covered period that's a 8 or 24-week period, or you can that starts with the funding date, or you can use an alternative payroll covered period that matches your payroll to just make it a little easier on the presentation. But are all payroll costs that were incurred during the covered period but paid after the covered period or the alternative payroll covered period eligible for loan forgiveness? And the very important answer to this is yes, if the payroll costs are paid on or before the next regular payroll date after the covered period. So that's the accrued part. If you pay it in the next payroll period, it still will count for the forgiveness, even though the payment itself did not happen within the covered period. Are payroll costs that were incurred before the covered period but paid during the period eligible for forgiveness? The answer to that is also very favorable. The answer is yes. So you're grabbing the costs in the covered period, you're grabbing the costs from the pay period before the covered period and the pay period after the covered period. Should borrowers use the gross amount before deductions for taxes, employee benefit payments, and similar payments, or the net amounts to employees? We've covered that in the first two presentations in great detail, but it is the gross amount. Okay, this is new. This is a question that was asked a lot because there was room for some aggressive treatment if they didn't give some body to the rules. What expenses for group health care benefits will be considered payroll costs that are eligible for loan forgiveness? Remember, group health care benefits is yet another payroll cost in addition to your payroll cash compensation itself. But aggressive people like me, when they gave these broad terms of healthcare benefits, we were saying, well, yeah, anything you pay, just anything that's paid within that period, just go for it, which led to people trying, and this is going to happen with retirement benefits too, trying to time their payments to have them occur within the covered period. Makes sense. This answer is that the forgiveness is not provided for expenses for group health benefits accelerated from periods outside the covered period. Accelerated from periods outside the covered period. In other words, you can't prepay. Makes sense. They really want you to show expenses that were for benefits occurring during the covered period. As one of another CPA said, though, it's clear that the people that answer these questions aren't that familiar with some of the mechanics of things like this, because frankly, when it gets to the retirement, you're going to see a lot of people wait to pay things. They don't accelerate things. They're paying things that have accrued before. And they really didn't address that one, and that's going to come up when we go through the retirement benefits. First of all, can I include the employer's portion of payroll taxes in the forgiveness calculation? No. What contributions for retirement benefits will be considered payroll costs or eligible for loan forgiveness? So if you had asked me this question prior to our last seminar, I would have said, this is a very broad definition. They just said retirement benefits during the covered period. And so we were saying maybe you want to accelerate some payments, maybe you want to pay some old deferred payments, be aggressive, really bunch your payments in the covered period and get a large amount forgiven. Well, they attacked half of that. They said forgiveness is not provided for employer contributions for retirement benefits accelerated from periods outside the covered period. In other words, prepaying some kind of retirement benefit would not qualify as a forgivable item. What they really didn't address, though, it just shows they don't quite understand sometimes how this works. A lot of employers have, you have a matching formula for your retirement plan. There's some flexibility for those companies, and when they make that matching payment, that's a payment that may not have accrued, that liability may not have accrued during the covered period, but it might be paid during the covered period. They really didn't address that. So my interpretation on that is aggressive, which is to say if you're making a matching pension payment during that covered period, which is now either 8 or likely 24 weeks, I would include it. You cannot accelerate, though, to prepay a payment from the past. So how is the amount of owner compensations eligible for loan forgiveness determined? So this was a large segment of the questions after the last couple presentations, just because they really hadn't addressed it. So there's this whole issue of owner employees. There's a box on the forgiveness form for them. It's a separate area, but it was unclear what payments were included there, what the caps were, and how you treated retirement benefits and insurance payments benefits for owner employees. 2 or 3 weeks ago, they resolved this, and in a way that's pretty straightforward. The amounts, there's a calculation for this. It's you divide your amount by, divide your 2019 amount by 12 and multiply it by times 2.5. That gets you this number here. It's a number that you're going to hear a lot. 20,833. That's the cap. That's the amount of owner's compensation that you can include in that section of the forgiveness form. You're going to see that the employee's amount can go as high as 46,000 now, but the cap amount for owner employees is 20,833. If you choose the 8-week period, it's 15,385. But there are categories of, there are entities, and the treatment is different for each entity. For the C Corp, S Corp, and self-employed persons, all of those 20,000 thresholds or caps exist. But, and I don't have a slide for this because it's so recent, but know this. Prior to this most recent guideline, we thought that this 20,833 number limit cap for each owner employee would include retirement benefits and include their group insurance portion. It does not. That 20,833 is literally just the cash compensation cap. You know that, and I'll show you later when we go through the forms, there is a line on the forgiveness forms for retirement and for insurance as part of the payroll costs. So you will be able to include the C Corp's retirement owner employees prorated retirement and the S Corp owner employees prorated retirement covered amount covered through the period in that box for employee retirement benefits as a payroll cost. S Corps, it's the same thing, but one difference. You cannot include an S Corp owner employee's health insurance in that health insurance box. The IRS and the SBA both assume that that amount is already included in the 20,833. I'm going to go touch on these once more again when we go through the forms, but that's new. A lot of my clients are self-employed. They have Schedule Cs. And that's it. They don't have employees. One, they're going to be able to use that 3805 EZ form, as I said. Two, their cap, their amount that they can have forgiven is called owner replacement. Owner replacement is the terminology they use. It's a really good term because in essence, it says that that amount, your loan was based on your 2019 Schedule C, correct? The maximum amount of the loan using that formula and knowing that it's capped at $100,000 was $20,833. Well, now you know that the owner replacement is also $20,833. So the key term is automatic. And there's some difference of opinion out there, largely because they've been so poor at explaining this. There are, I would say 75% of the people that make this type of presentation say for Schedule C people, that's automatic. It's based on your 19 loan. It's considered owner replacement. If you're breathing, you fill out your 3805 EZ on the line for payroll. You just put the 20,833. There are others that suggest that even though you do put the 20,833 up to 20,833, I should say, that you should move some funds from your bank business account to your personal account to show in some way that $20,000 was actually processed during the year. That's a suggestion, not a requirement. I think actually the intention of the SBA for self-employed people was an automatic forgiveness of the loan. That's a huge thing to say for a large amount of the people that got these loans. So, general partners in partnerships, there's a definition of what number you use for those folks too for the forgiveness. You go to your K1 form. You go to your 2020 K form, if it's K1 form has already been done. There's a line called net income from self-employment. Net income from self-employment. I think it's line 13 on your K1. You use that number. limited to 100,000. You use that number, multiply it times 92%, and you use that number up to the forgivable amount of 20,833. So it's a formula for the general partners. That's new. General partners in partnerships do not get to include their retirement and do not get to include their health insurance as an additional payroll cost. So each category has their own little segment, but at least we have clarity here now. And it looks like for most people, when you do that form and you're an owner employee, you're going to put 20,833 as the amount for your share of the forgiveness. Hopefully that's clear. Okay, non-payroll costs. Are non-payroll costs incurred during the covered period but paid after the covered period eligible for loan forgiveness? This is still the Flexibility Act. The answer is favorable, yes. If they are incurred during the covered period and paid on or before the next regular billing date, even if that billing date is after the covered period, they're included. This is new. Is interest on unsecured credit eligible for loan forgiveness? No. Although interest on unsecured credit incurred before February 15th is a permissible use of the PPP loan, it was one of the numbers you could use to generate the loan. It is not an amount that you can put down as forgivable. This is interest on unsecured credit. Now, secured, which is on any kind of security on personal and physical property, does qualify. Secured, yes. Unsecured, no. Well, forgiveness must be reduced due to the reduction of full-time employees during the covered period if laid off employees decline borrowers' offer to rehire. This is one of the safe harbors. I'm going to refer to them constantly. A borrower may exclude any reduction in full-time equivalents employees if the borrower can document an inability to rehire individuals who are employees of the borrower on February 15th, or an inability to hire similarly qualified individuals for unfilled positions. That's a criteria. If you can meet that one, they will not be subject to a reduction in forgiveness for that employee. That's important. That's one of them, and I'm going to recite them all at the end. That's one of the safe harbors. When calculating the full-time reduction exceptions, do borrowers include employees who made more than $100,000 in 2019? Okay, so the answer to that, I don't have the answer on the presentation, but the answer is yes. You do for the full-time equivalent reduction on that worksheet. If you're one of those people that does have to do that third worksheet, you do have to include employees who made more than $100,000 if there's a full-time equivalent reduction for those people. So, this is, by the way, the complicated part of the whole deal. This is why if you don't have reductions in full-time equivalents, full-time employees, if you don't have reduction in salaries, you can kind of passively listen to what I'm saying here because you're going to qualify for that easy 3805Z form. You don't have to worry about all this. The general overview is that at least 60%, used to be 75%, must be used for payroll, health insurance, and pension contributions. Again, that's different from the 75%. Your banker is your gatekeeper. Your banker will be the one who determines the amount of forgiveness. So that relationship's important. I'm finding it interesting that different banks are treating the actual opening of the forgiveness period differently. Some are like, come, let's get it going now, let's hurry it up. There's others that are like, let's wait a minute because we may have much more lenient ways of reporting. But your relationship with your bank, your ongoing discussions with them are critical. Paid or incurred. Again, very liberal interpretation, just want to restate it. Costs paid or incurred within the covered period are eligible for forgiveness. The special rules govern paid or incurred for payroll costs. Paid is date distributed, so you can immediately pay wages that had been earned prior to the covered period. Incurred adds more flexibility. Payroll costs incurred for your last pay period of the 24-week period are eligible for forgiveness as long as you're paid no later than the next regular payroll day. You know, if you add that to the fact that it's 24 weeks now, to the fact that the loan itself was based on a 10-week period, the flexibility guidelines should, for most people, mean your loan is going to get forgiven. That's a blanket, bold statement, but it's true, because it's that whole important thing to know that the loan itself, the way that that amount was computed was based on a much shorter period, the amount of period they are allowing you to make the payments to satisfy it. Important. I think it'll be clear when I show you the forms. The eligible expenses consist of payroll costs. The 60% are payroll, limited to $100,000 per employee. That's how they get the $20,000 number for the max for self-employed owner employees. State employer taxes, pension contribution, and health insurance. The 40% expenditures, which was originally 25, is for rent, mortgage interest, that's mortgages that were in place as of February 15th of the year, utilities, internet, telephone, gas, transportation for vehicles. Those are the non-payroll. I've seen that the new laws are so favorable that this 60% payroll costs are enough to absorb the full amount of the loan, so you don't even need the 40% expenditures unless you really were in a shutdown mode, which a lot of people were, of course, particularly restaurants. The salary reduction is the most complicated element of the whole process, which is why the 3805Z is easy, is great, because you don't have to worry about any of this if you didn't have any reduction. But the forgiveness is reduced at more than 20, if there's more than a 25% reduction pay rate for employees making less than $100,000 a year. You have your covered period and your reference period. Those are the two things you're comparing. Your covered period is the 24-month, it's 24-week period starting when the loan is funded. You compute your average annual salary for that covered period, and you compare that number to the reference period, which is January 1st to March 31st. The average annual salary for each employee during that period. You compare the two. If the covered period is less than 75% of the reference period, you do have to go through this calculation of the reduction in loan forgiveness. The full-time equivalent reduction is, you have two reference periods, February 15th, 2019 to June 30th, 19, and January 1st, 2020 to February 29th, 2020. But again, you're comparing the covered period to the reference period to determine if there's been a reduction. Safe harbor number 2, if you restore your full-time employees by December 31st, it was June, this is another safe harbor. So if you did experience a significant reduction in full-time equivalents, that could significantly reduce the amount of your loan forgiveness, but you have time to restore, is the key word, your employees to that amount. So there was one safe harbor for not being able to meet the skills level of the prior people you let go. There's also the restoration option to avoid the reduction forgiveness for having a reduction in your employees. There's an exemption for employees who refuse to come back to work. If you make a good faith written offer to rehire that person and it was for the same salary, those people also do not count as potential reduction in full-time equivalents. The tax implications. We went through this fast last time because it just happened, and it's just the one bad news. Yes, the forgiveness of the loan is not a taxable event, but the IRS has recently issued guidelines that the expenses you use the loan for are not deductible. That was the double dip we were hoping for. As of now, that does not appear to be happening. Okay, they also, other elements of the Flexibility Act, the maturity date for the non-forgiven PPP loan was extended from 2 years to 5. We were worried about what we call a cliff, which is if you didn't spend 60% of your loan on payroll costs, that none of the loan would be forgiven. That did not happen. That is not a cliff. You still get some of your loan forgiven. I already covered this safe harbor, I believe, which is the inability to rehire. So I'm going to keep moving. Here's the paperwork you'll need. You'll need the loan amount, the loan disbursement date. Everybody asks me why they want this. Really still clear why, but the employees at the date of the loan application and the employees at the date of the forgiveness, time of the forgiveness, and your payroll schedule, and you're going to elect your covered period was 8 weeks, it's now 24. You need a separate bank account reconciliation. That would be ideal. It's not required, but having everything not commingled is a great way to have clarity in your presentation and also avoid the appearance of some commingling. Copy payments made and backup for each period and keep them in a file. We've covered a lot of that before. I want to get to the form itself. So here we go. Here's the form. Here is the first page of the form. Frankly, how you do the form is you're going to start from the last page and work your way forward. But the top of this form is just information you're going to need, your loan number and your PPP loan number, which in our case, I think most cases is the same number. The PPP loan amount, which you know. The disbursement date is the date it entered your bank account. They want the employees at the time of the loan application. Again, that's what I just said. We're not clear on that. And employees at the time of the forgiveness application. That is important. You do have to enter your emergency advance. If you've got an emergency loan and got a $10,000 advance on that, you need to enter it there. You need to enter your pay period. Most are bi-weekly, every other week. You need to indicate whether you're choosing the alternative payroll covered period. Remember I mentioned that earlier. You could stagger your period a little bit to match your payroll. But most importantly of all, maybe the most important thing in this entire form is that box. Hit that box if it's $2 million or less. It changes the entire processing approach from the bank on that loan. $2 million and under is pretty much a certification approach. I certify that these amounts are correct. If it's over $2 million, they say they're going to audit. What that means is still unclear. I think the SBA is unclear what it means. So the $2 million number is huge. This is also one of the reasons some people are wondering whether they should delay presenting this, because one of the theories is that the new HEALS Act, if it ever comes into play, will tell those people under 2 million not to have to fill out anything, perhaps, that everything is forgiven. We don't know. But this is the rules as we sit here today. Everything else on this form is pulled from the forms that follow, so I will go to those. And the one that is the thorniest is Table 1. The Table 1 form is the one where you have to compute the amount of the salary or hourly wage reduction. Remember, that's where you compare your covered period to your reference period to compute what the wage reduction was. You also are going to use this form to compute your full-time employees. You have two tables. The first table is for employees in 2019 that earned under $100,000. Those are the people that have the wage reduction issue. And then the table 2 is for people who earn more than $100,000. Note the safe harbor here. Another safe harbor. This is the restoration safe harbor that I mentioned. Look at step 4. If the borrower's total full-time employees as of December 31st, enter that date. If that amount is up to the amount of February 15th, you've restored your payroll, even if you hadn't in the covered period, and do not have to have a reduction due to reduction in your employees. If I have to, I'm not sure if I have time, but just briefly, what you're doing on this form, if you were paying somebody $80,000 a year in the January through March period, and then in the covered period, you say you pay them $52,000 a year. That's more than a 25% reduction in that person's salary. So you will have to do this computation. What you will do is you will annualize the amount you did pay the person, $52,000, compare it to the 80, that's your percentage of the reduction. You're going to prorate that reduction over the 24 weeks to find out how much you need to reduce your forgiveness by. But look at the box just before the salary hourly wage reduction. In the sample that I just gave, the 80,000 sample, that person, if they're being paid $50,000 a year, so that cash compensation will not be 8 like it used to be. It'll be more like 24 or 25,000. It could be as high as $46,000 in that box. The salary reduction in the scenario that I just said was about $3,000. You're still getting a $21,000 payroll cost under this new format that you wouldn't have gotten under the 8-week, even though your salary reduction amount is a little higher. That cash compensation box is the whole ballgame. You're being able to load that with $46,000 per employee. That's huge. That's in large cases, numerous cases, I think it's going to get you enough to get the loan forgiven. I'm going to go back to the second form, which is you take the information from those tables and you populate this form with your payroll costs. C is coming from your schedule, and you're entering all of your other numbers from that schedule. This is all just filling. Actually, that's not. I should use this one. It's this is the one where you're just populating from that third schedule. You're just populating from the one that's harder to fill out. Note line 6, 7, and 8. Amounts paid for health insurance, retirement plans, and state taxes. Remember I said earlier that the employer now is eligible to include a portion of his retirement plan. That's where that would go on line 7. It's no longer considered part of your cash compensation. The same for the health insurance. We covered what is covered in there, but it goes in that box. So you're able to put a larger amount in boxes 6 and 7. You add those amounts to your cash compensation. That gives you your total payroll costs. You look again at those safe harbors to find out whether or not you need to even worry about full-time equivalents. You take those numbers and you populate the front page of the return form, the payroll costs. Now you add your mortgage interest payments. These are these are the non-payroll costs. Now you enter your rent. Now you enter utilities. Now you enter the reduction amount that you computed. You add all those together, that becomes your net number, and you take a quotient on that. The amount, if you did in fact do not qualify for any of the safe harbors, and in fact had a reduction in your employees, that's where you put the percentage there. So if you don't qualify for the safe harbors, this can be damaging because it will reduce the amount of the loan forgiven. That's why know your safe harbors. See if you can qualify for this full-time equivalent. The final safe harbor, the one that I didn't go in detail, but it's a good time to do it, is right here. And that is safe harbor 1. Look at that. If you were unable to operate between February 15th at the end of the year because of declarations of the Secretary of Health and Human Services, the Director of the Center of Disease Control, or OSHA, if the reason for your reduction is because of one of those factors impacted, and they give very subjective terms, not able to operate at the same level, you can qualify for the safe harbor and not have to worry about that quotient reducing your forgiveness. This is huge. Safe harbors, I'm sorry I keep emphasizing it, but it's your ticket out of having this forgiveness reduced. So, should I apply early for the forgiveness? This is a question everybody's asking. You can. First of all, can you? The answer is yes. A borrower may submit a loan forgiveness application anytime on or before the maturity date of the loan, including before the end of the covered period, if you've used all the loan proceeds. If the borrower applies for forgiveness before the end of the covered period and has reduced the employee's salaries in excess of that 25%, you have to extrapolate. You have to compute the reduction in loan forgiveness as if it was a 24-week covered period, even though you submitted it early. So they did address that part. You do have to do some math on that one. How do early applicants for FTE reductions for the length of their covered period? So they did not address this. The interim final rules address the salary hourly wage reduction, but they do not address what happens if your full-time employees go down after you submit the application. Most borrowers maintain the FTE and salary hourly wage rate throughout the remainder of their covered period to avoid reduction. We already said the answer to that is yes, through the remainder of the covered period. But the real issue is what happens if your full-time employees go down after you submit. This is one that is tricky because frankly, a lot of people, they've got a 24-week forgiveness period. They've fulfilled, they've used all the funds, they've done it. They don't have, at this point, a reduction in their full-time employees. So if they submit the application, it's all going to be forgiven. Shouldn't I just submit that right now? The answer is probably likely yes, but you do need to be aware of one caveat, which is we don't know for absolute certainty if that person who filed that form early then cuts his staff significantly by the end of the year, whether or not you have to revisit the reduction for the full-time employee quotient. The general body of agreement, I think, out there is that that's not going to happen. That if you file it early and you have not had a reduction during the covered period, you're going to be okay. There's some reasons for that. That's because of the earlier in one of the safe harbor provisions, they say you use the earlier of December 31st or the date the application is submitted to use the safe harbor. So it is logical that they would use the same theory for whether or not you need to look back, go backwards, go forwards rather, and see if your employees went down, whether or not you're going to have to suffer perhaps a reduction of forgiveness. What that argues for is probably a yes to an early filing. The only argument against a yes, therefore, would be, are they going to change and liberalize their presentation even more, which we talked about earlier, which the banks are suspecting they will. So 2 days ago, they issued another proclamation. It doesn't affect much, but it does answer one question a lot of my clients had, which is this whole issue of the owner employees. When we said they're a separate category, and that's capped at 20,000 for, it said originally, all owner employees. They've changed this in the new guidance as of August 26th. The definition of an owner employee is an employer with a stake of less than 5% in a C corporation. I should say, people less than 5 aren't subject to the owner employee compensation rule. So if it's 5% or more, all the tests that I just mentioned apply. But if it's under 5% owner employee, then you're just like any other employee in terms of how you treat it. So that's new guidance. So we're trying to keep as contemporaneous as we can on this. And now some questions that I have, and you can interrupt me if I go too far or you have outside questions, but I did want to answer some of the questions that have been asked already. Some have already been answered. As a self-employed, solo real estate broker, can I use all my PPP for income replacement? I think we covered that. The answer is yes. And the amount is $20,833. That's the cap. We have an employee who has passed away and we haven't hired anybody to replace his role in the company. We also have an employee who resigned. Hence, we don't have the same employee count. How do we address this with the PPP loan forgiveness? Well, remember what I said. There's a safe harbor if somebody resigns, if somebody chooses not to come back. That's the first safe harbor. If you cannot replace the person, that one could be a reduction in your full-time employees, but then you have to ask yourself the question whether or not we qualify for the reduction in business due to the CPCC and and the OSHA and all of that. Okay. Even if we bring everybody back, do we need to bring them back with 100% salary restoration, or we can remain on pay cuts of 10 to 20%? Remember, it's 25% is the key number. We need to retain salaries at 75%. Is there any new information on the audit threshold? Is it something like $1 million? Well, right now it's $2 million, and that's what we're wondering if they're going to change. But I should say right now the audit threshold is $2 million. Okay. In the meantime, before forgiveness is formally granted, do we continue to show the whole PP fund as a long-term liability? This is a financial statement question, which is a good one. Before it's formally granted, yes, you keep it. Will full forgiveness turn this into other income? This is an accounting question, but the answer is yes. It goes away as a liability, and now it becomes income, but it's non-taxable income, remember. Is there any issue concerning shareholder distributions being issued during the PPP program? Well, distributions are not income. We're looking at income paid to owner employees. That's the key number to determine what the amount is that can be forgiven, and that amount is capped at $20,833. Do safe harbor rules apply if a business is unable to open due to the state mandates? It applies in terms of not meeting the full-time employee requirement. We don't yet have an amnesty for the loan for the person never was able to open or was only able to open up by a small amount. That's what we think might be coming in future legislation. But as of now, if you have that loan and you never use those funds for the purposes you should, you now have a 1% 5-year loan, but unfortunately, as of now, it still has not been forgiven. Keep your eye on the rules and news in terms of whether they address this. I cannot bring back some employees due to limited restrictions our clients have, and they do not want to hire us in its entirety. I think that falls within the category of being able to avoid having your loan reduction reduced because of the full-time employees. If I use 100% of my PPP loan for payroll, does this meet the forgiveness guideline? Absolutely. Interested in update on where Congress is. And I already mentioned that we're already waiting for them. That got stalled, but there's a potential HEALS Act down the road that would add another line of PPPs. How do we fill out the form? Well, yeah, just need to know how benefits are included. Remember, the retirement benefits and health insurance are separate payroll costs on the payroll cost forgiveness form. Please discuss the rules for qualifying for the EZ form. Remember what those are. You're self-employed, or you weren't subject to any reduction in full-time equivalents and did not have a 25% reduction in payroll. Thank you for your information. There is talk that some business owners can count themselves up to $100,000. Is that true? Remember what I said on those people? That's 20,833 is the magic number for owner employees. It's capped at 100,000 annually, which prorates to 20,833. Let's see. Will the Giants make the playoffs? They asked that last time. That is not. The answer is no. What if your business has not been allowed to open, so you still have no payroll? Again, they've been very lenient on forgiveness with these safe harbors on not retaining the same level of payroll. But in terms of whether or not there's still a loan out there, frankly, there still is a loan that has to be repaid if you haven't used it for the appropriate funds. I'd say the most important thing to keep your eye on now is whether or not in their effort to help the American business, because this thing is protracted a lot longer than they expected, it would be a huge give, but whether or not they're just going to say loans of $2 million and under are forgiven. I'm not predicting that will happen, but that certainly seems to be the movement towards where the spirit of the law is. So with that, there's a couple other questions, but I want to have some maybe more current questions if we still have time. So if there's someone there that could throw those at me, I don't know if that's Monique. Anyone?
Yeah, there's quite a few questions in the chat box. You've gotten to many of them, Tom. Latest question: are disability, life, and workers' comp insurance included in the non-payroll costs? No. It's just a health insurance, group health insurance. What if the business closes?
Well, that's what I was saying at the end there, which is, Matt, is if the business closes, well, there's also the legal issue whether or not there's liabilities for a corporation or anything else like that. But right now, if the business closes, they do have this loan. They obviously haven't retained their employees, and you've got forgiveness in that element of it. But as of now, until we get more legislation, that person still has a loan on the books that maybe then it becomes a legal issue of whether or not that's a loan that if your business is filing for bankruptcy or anything else like that. If you follow the flow of the spirit of the law, I think a person in that scenario this is me talking now, that person is not going to be subject to repayment on that loan. That's just the spirit of the law right now.
Okay. Tom, when do you anticipate more guidance coming from Congress? Or?
Well, they usually do it the day I give a presentation because they are watching me closely, Matt. So they probably think they've done a pretty good job. You've got two elements of this. You've got the SBA, which is going through the guidelines of what is, and then you've got Congress that is hopefully going to address those more questions of what will be going down the road. So we're running out of things that we don't have guidance on on the laws that exist. It's really more about what's coming down the road in terms of whether or not there's going to be an additional PPP loan and whether or not they're going to liberalize the forgiveness.
Okay.
I would say, given the pattern, they've been doing something every couple of weeks to 3 weeks. There's some guidelines, some are really small. Remember, I read one from 2 days ago that only covered the what constitutes an owner-employee, but
right.
We'll keep our eye on it. We'll post it on our website, and I'm sure you guys will too.
Okay. A couple quick questions. If we accrued employer 401k match for 2019, but don't pay it until the 24-week, can that be counted as employer retirement costs for this PPP?
It's a super smart question. It's what I was talking about when we addressed what they did address in the most recent guidelines, which was what happens if you accelerate, if you pay one in advance. Their question is what I was talking about earlier, which is, like a lot of us in business, we time our matching payments. This is my subjective take, but in the absence of them saying you can't, I think that's not an acceleration of a payment. That's a payment that's already due and it's just being paid at your choosing. So I would count it.
Okay. What if you have liabilities required as part of a union agreement that are associated with payroll? Are those covered as payroll expenses?
They are now. I noticed that is one of the items that they were discussing in the changes in what are qualified expenses. That was one of the ones that's up. I said earlier, one of them was costs incurred to make your work area safer and adhere to new worker guidelines. And another one was for cloud type of expenditures, but another one has to do with just that type of expenditure, but it's not in the law yet.
Okay. What if an employer lays off any employee before December 2020? Does he have to repay the loan? Is there any penalty if they lay off the employees during the covered period?
Okay, so I tried to explain that. So what is going on there is if you file early and you haven't had a reduction, I think you're going to be fine because I think they're going to use the end of the covered period to determine whether or not you've had an employee reduction. If you have a reduction during the covered period, which I've covered, then you do have to do the reduction in the forgiveness. Although, not to be a drone on this, safe harbors are abounding everywhere, and hopefully one of them will get you away from that concern, even if you did have that reduction. You have that restoration date. December 31st is a date that you can restore both how much you pay people and how many employees you have. Of course, if you file it early, you're essentially saying I don't need that restoration date. But if you feel that you will restore by then, you should probably wait before you file the return, the application for it.
We already depleted our PPP loan funds at week 10. Do we wait to file and use the 24-week calculations?
Well, again, I think I would, the only caveat to that is if you sense that your employees are going to go down after you file. I still don't think that's an issue. Some people feel it's an issue, but I think that the answer to that question is likely yes.
All right. Tom, we are at 2 o'clock and we like to start on time and end on time. And I still got about 15 questions in the chat box. So, respect everybody's time. I respect all the questions, and Tom, I think you did a phenomenal job covering a very complicated subject in a short period of time. I will tell you, those who are on the line who haven't gotten your questions answered, we will look to potentially do another part of this. I'm not sure we're going to call on Tom again because I know it's a big burden to engage on this and be here for this, but I do want to do this. So we'll look to potentially do another session on this topic. But I do want to give a plug for Tom and the team at PP&Co. That if you are a business in need of accounting services and advice on PPP loan forgiveness, Tom and his team are there to help you. So I would encourage you to reach out to them and see how they can help you on a professional basis if your questions are more complicated than are getting answered here. So Tom, appreciate your time being with us today. Encourage people to, seek out advice and counsel from their accounting firm or their accountant, and obviously call on PP&Co if you guys can help them. So Tom, thank you.
Thanks, Matt.
Yeah, I just also want to thank everybody for being here today. I know we got more questions coming. It's a complicated topic, and we'll try to get some of these questions answered down the road and maybe another session.
You could forward me some of those questions like we did last time too, and I might be able to answer them in the next couple of days.
But I think we got this all recorded, so we'll see what we can do to capture those. But in the meantime, I ask that everybody try to stay safe, practice your social and physical distancing, which requires you to wear a mask when you're out in the public, and practice the 3 C's. Avoid closed spaces, crowded places, and close contact settings. It seems to work for many other countries around the world, so do that here. And then go out and have a great rest of your day. Have a healthy and prosperous day. Thanks for being with us.